What's up guys, Zoeb here from OneGlanceTrader.com, and in this video I'll be sharing with you how easy it is to find high quality candlestick chart patterns and how to trade them using my OGT Price Action Indicator. And for those of you who are brand new to the channel and want to download the Price Action Indicator, it's completely free. First link in the description, and what I'll also do is link up in the top right hand corner so you can learn how to use the indicator and install it and all that good stuff. So in today's video I'm going to be looking at the New Zealand dollar versus the American dollar on the 5-minute chart. This trade happened today, 20th of January, and I'll be looking at this bearish bar over here, and I'll go through the reasons, and I think there's 5 of them, of why this particular trade is a high probability trade. Now I'm going to go straight out there and say that no trade or no trading signal, wherever you get it from, is going to be 100% accurate, but if you keep overlaying different elements or confluence factors, which I'll go into, it can certainly stack the odds inside your favor. And one thing is these patterns happen on all time frames, on all currency pairs. They happen all the time, and it just comes with practice of putting the indicator on your chart, set the settings to how you want them set, and then just wait for these alerts to come in. This indicator's got push notifications from email, push notifications I just mentioned on your smartphone, and also desktop alerts as well. So you've got everything on there to set and forget, and just wait until one of these alerts come in, and then you can look at your screen and then take action. Hence the reason for the name of this channel, One Glance Trader. So this is the bar I'm looking at the moment, and you might see all these different lines and all these little symbols and this blue rectangle. I'll go through all of that right now. So what I've done is I've created a little checklist of why I feel that this trade would have been a high probability trade for a short. Now the first one is that it is a bearish engulfing bar. So what do I mean by that? A bearish engulfing bar, as defined and coded in my indicator, is done by this red dot. Looks more of a star, a sun type star thing when you actually zoom in. But effectively, it's when the bar engulfs the previous bar, so the whole range. So you can see there that this red bar is engulfs the body and the whole range of the previous bar. So again, my indicator inside the settings, I'm not going to go into it in this video. You can look back in my previous videos to go find out how it's all set up and how customizable this indicator is, but it's showing you there that this is a candlestick pattern, a very reliable candlestick pattern, for a bearish kind of signal. But we can't just go short just based on that. So that's good. It's told us that. What else do we know about this bar? So the second thing is that it's also a bearish marubozu candlestick pattern. And what a marubozu candlestick pattern basically is that the in this case the low of the bar is at the bottom of the range. So if you zoom in on this, you can see that the close and the low are exactly the same. So therefore the sellers were dominant from start to finish in this, and it closed right at the bottom of its range, and that's basically a bearish marubozu. The previous bar is a bearish, not bearish, sorry, is a bullish marubozu, and that means that the close is equal to the high of the bar. So that is the difference between there and there. Now you may be asking, why isn't there a buy signal or using your indicator on this one, and I'll explain that in 1 second. But just so you know, so we've got a bearish engulfing bar and it's also a marubozu bar. How strong is that as a signal that it's bearish engulfing and a bearish marubozu? So you've got two things happening there, but again, that's still not the main reason why to take this trade. And really, I've said it in many videos, when you're using candlestick patterns, it's got to happen at a relevant area in the chart. You can't just trade candlestick patterns just randomly on a price chart. There's got to be some logic to it. And this is where I think the latest version of my OGT Price Action Indicator, version 1.3, kind of takes into effect. And this is all down to the long-term investors. Now, the reason why long-term investors are in inverted commas, what I'm saying, or how do we determine who are the long-term investors? And the way that is determined is based on Daryl Guppy, who's an Australian trader. And again, I'll link to his video in the top right hand corner so you can learn more about this. But he basically uses moving averages or groups of moving averages to determine short-term investors and long-term investors. Now, I haven't got the short-term investors on this chart, but they are kind of the faster moving averages. What I've got here is what he deems in inverted commas the long-term investor moving averages. So these go range between the 30 period and the 60 period, and then you've got 50, 40, and 35, and some other stuff in between here to kind of make this a full range. So again, that video will be in the top right hand corner as you saw, or in the link in the description. And what that's saying is that price, when it moves into these moving averages, what happens to these moving averages when price kind of does that? And as you can see here, that these quote unquote long-term moving average investors don't move, because normally they'll start crossing over. So if I go across slightly over here, see, if I look over here, as price goes down, you can see that the long-term moving averages start crossing and then become into this downtrend. But you can see here, actually we'll look over here. So as price moves in, price doesn't move, and then as price goes up here, price starts to turn, and these quote-unquote investors start, in this case, selling their positions because the downtrend is over. But we can see at this point, as when price goes into the moving averages, the long-term investors at this stage are not phased, and therefore they are not moving apart. I mean, they're not crossing over, they're staying strong, and they're keeping their kind of distance. Yeah, they might move in slightly, but they are not crossing over, and they're keeping their kind of separation from each other. So that to me is another indication that price potentially is not, or the long-term are not respecting this kind of uptrend or potential reversal, and potentially see it more as a pullback. So that's another reason why that this potential sell opportunity is a good opportunity to have. And going back to the question of why you only see kind of bearish kind of patterns inside here, is because the indicator is designed to only show patterns where these moving averages are in these particular order. So it goes in the ranges from the lowest moving average, in this case 30, all the way up to the highest moving averages, which is 60, and prices kind of below this moving averages. So in this example, it's only going to show bearish patterns. You can turn this off. Again, it's very customizable, but what I'm trying to do is trying to show you examples and put probability in your favor and trade with the trend. So again, that's another reason why that this potential, when this bar is formed, or when this bar closes, as a potential sell trade. Then you've got the longer term investors also not phased by buyers, and what this means is, it's not part of the indicator, it's just something that I've added on, is the 100-day and the 200-day moving average. So if I zoom out on this chart, I'll probably zoom out a bit more, you can see that we've been in this kind of downtrend for a while, and yeah, price tried to break through the 200, didn't really kind of do it, and then it's gone back down again over here. So you can see there that even the 100-day and the 200-day moving average are again also not phased by this little upsurge here from the buyers, again showing that, you know, potentially that this is a high probability trade that this will start to sell off again. And then lastly, we're in the support and resistance zone. So this is what this blue rectangular line goes in over here. You've got some resistance here, you've got some support over here, and then even when you zoom out slightly to over here, you've got two areas here where, you know, you've got some good support and resistance, or resistance in this case, areas over here. So when price goes back to this level, you're gonna potentially get a reaction. And so when you add all of these things together, you have a makings of a high probability trade, in my opinion, to the downside. And like I said, these opportunities happen all day long. Now you've got another engulfing pattern over here. As you can see, this red bar engulfs this green bar over here. Now again, you know, you could take this trade, and depending on where you put your stop loss, you might or may not get stopped out. But then again, it does also sell off as well over here. But I don't like this one, and the reason why I don't like this is because you're quite far way down this move, and the more pullbacks you get, eventually that this trade will get exhausted and start reversing. But also, what I like to see price go into the you know, long-term investment moving averages, similar to this one. It's gone inside it and then gone down over here, and that's why that, in my view, that you can still take a trade. It's still highly probable, and as you can see, depending on where you put your risk to reward and everything like that, you can still make some good ROI, maybe a 2-to-1 trade on here. But from my perspective, this one here would have been a fantastic opportunity to go in. And you know, the sell off here at the moment is 16 pips. Even if you put it over at the 100-day, that's a 4 pip. If you put it here, that's a 7 pip. So you know, you've got a 7 pip to make 16 back, just over a 2, depending on how risk averse that you want it to be on here. So again, you've got a good risk to reward ratio on this trade as well, from what we can see. But for me, I like to not be in trades for a while, so my first target would have been over here or over here at 6-7 pips. So therefore, I probably would have used 100 EMA just to get over a 1-to-1, and then probably taken half the trade off, and then let move stop to break even, and then just let the rest run. So again, there's many different ways you can kind of manage this trade, but hopefully you can see that this is a great place to do high probability trades, and this happens all day and every day. And again, like you said, this indicator does give a lot of signals, but you can again tweak the indicator to kind of show signals, depending on how loose, quote unquote loose, you want the signals to be. So there's many opportunities here, and like I said, you know, what I would strongly recommend is that you go watch the next video that you're going to see on the end screen now, that takes you through this indicator in a lot more detail. Therefore, you can learn how to trade it, how to use it, how to apply it, and obviously become profitable with it. So I really hope you enjoyed this video and learnt a lot from how to trade high probability setups.